Hey everyone. I hope you had a good day today. We'll kick it off here with a quick discussion of the systematic approach to the day. There's a lot of interesting trade opportunities. So I'm going to share my screen and we'll kick it off with anyone who has questions. We can actually take those first if we want to use any as direction. If not, I'll get started here. And we'll start with the signals that I trade. And from there, we can move on to questions, concerns, anything that came up during the day. So let's get started. Like I said before, everything requires context. Probably the most important thing after you have a signal generator is defining how much your system will account for context. And all of my signals are very context dependent. So as you might imagine, there's a lot of supporting documentation for how to trade them properly. But so today we can start with just the open. As we know from Al, when you get functionally a doji on the open, your odds for sideways trade go up significantly. So I usually don't take any signals within the first 6 bars. This is something Brad says often. So good practice unless you have really strong breakout and follow through with good context. Breaking and follow through as part of an inside day can also be dangerous, open context. So good context always makes the difference for the breakout and follow through on the open, bars 1 and 2. Here, odds were for sideways trade. I actually ended up taking, so this was also a type of reversal, a 4-bar reversal. So I actually took this sell at the 6 high because this is a small inside bar. They got 2 measured moves. So if you take this, so that was 1 measured move, 2 measured moves of this and this is as we know, a bad signal bar, right? It's a weak close of an inside bar. And I took the 50% pullback of, remove that. So my first trade of the day was from this signal on bar 8. In a trading range, those signals are not by the close. So if you take the full range, here's your 50% pullback is right here at the high of the bad signal bar again. So bad signal bar, breakout, and weak follow through. So I entered partial position at this high here, and then I entered still a partial position, 0.05% risk here. And then I was out back at the bar 8 high on bar 13. And let me just get rid of those fibs. And then nothing here. Didn't trade here. I took this pullback here, bought the high of this signal bar. So this is a trend bar that got follow through, and this is a micro gap setup. So I bought the high of bar 2 of the micro gap on bar 15, and I was back out at the high of bar 14 here. Armando, the stop for this trade, the one that I scaled into, it was below the low of the day. I used kind of disaster stops because my back testing and comfort level with managing the positions is such that I know that if it's going to go against me, I typically use 3 measured moves for stops so that it's enough that I can manage the position. Because you'll often get, if a trade fails, getting 2 measured moves of the signal against you is not uncommon. but typically you'll then get a two-leg pullback, so you can usually manage the position. Um, so then, yep, having a 3R measured move stop is typically the way that I uh, handle my stops. So it was below the low of the day. Um, so again, this was the second trade, entering here, out here. I did not trade the climactic part of this leg, but then I did enter at a 50% pullback of the leg, uh, anticipating a, sorry, not that, of this. Where is it? No, was well. I entered at the first. I entered here. Was not at 50%. It was just below 30%. So I entered one contract here, and then one contract at the low of bar 18. Not the low. Sorry, the open of bar 18 right here. So those are my two entries here, and then back out at the high of, and I typically only hold trades for 1 to 2 bars. So then was back out at the high of 20. So this was the signal. So then I was out on 26 at this high right here. And then we got a sell signal here. I didn't take that. I was anticipating that this small two-leg pullback in a tight channel would get a second leg of pullback, but I thought that we would also get a more of a test of the previous high. So I was picturing we would see more of a wedge than a lower high major trend reversal. So I did not sell here, anticipating that we would also get more of a complex second leg up and then a more complex correction down. Uh, so I didn't trade any of these shorts, or I didn't trade this short until this sell signal appeared, because at that point, when this sell signal doesn't get two closes against it, and you generate another sell signal, this is a trading range sell signal. I sold on a pullback, so I sold a very small position at the close, and then we didn't get any pullback, so I just got rid of, got out of that position. Um, the close of this bar, so back at the basically the same area that I was entering before, and didn't do anything here. I didn't do anything there. I didn't take any trades in here. This is a buy below signal. It's a trading range signal, and I did not take that there. But then I did buy. Let me go down to a lower time frame because I was looking at a 1 minute chart at that point. Anticipating at least a retest and transition to a trading range here. I bought below this bar, so this buy signal I bought here. So one of the things that I'll often do when I'm looking at a 5 minute chart is go down to, and I understand where the what the price structure is that's developing. I'll see whether, and if I don't have any signals here, and I'm not sure what the optimal location would be for an entry, because I prefer to enter on limit orders, and if I can't clearly justify a limit order here, but I know that the underlying structure supports that, like, I could buy here, but this is a buy below signal, so I'd prefer to buy below. But if I'm seeing something on a lower time frame that allows me to enter, and the signals there, so all of the signals are based on price action. So as soon as I change time frames, they'll all be just as relevant on those time frames as they are on the higher time frame, and they're all traded exactly the same way. So here I'm able to enter below this bar, and then getting two more buy signals here confirms that I can hold the position, and then you get the reversal. And I was out back here, um, and that was the last trade I took. So those were all of my trades for the day. I typically only trade in the morning because I have to go pick up both of my boys from school at 2 o'clock. So I'm definitely done trading by 2, if not a little bit earlier. And this was a good time to be done because it was a little bit after 1, and I typically don't want to be managing a position after 1:30 because I have to leave at 2. So um, let's take this question. So, what other questions can I ask myself to decide if it's a trend or a trading range? Also, what questions do I need to ask myself in every trade? Um, well, the first, I mean, what is the most important thing in price action trading? It's you've left it in part of your question there. So we'll pull this up. So, what's the most important part of price action trading? You've identified it in that question. Anyone else who's in the room can volunteer an answer. It is the breakout, right? Because breakouts, properly identifying breakouts. Yes. So, Amanda, yeah. So, knowing where you are in the market cycle and market cycle context, yes. Well, context, but context is determined by yeah. So, breakouts. So, being able, everything starts with the breakout, right? That's breakouts are what start the market cycle. And so, in order to know where you are in the market cycle, you have to know how to identify breakouts. So this is why when Ali teaches PTM, he starts the PTM programming with breakouts. Like they are by far the most important price action phenomenon to be able to properly identify. Because from that, you can identify, and this gets to your question, how do you identify if you're in a trend or a trading range? If you're not breaking out, you're in a trading range, right? It's the inverse of the most important thing, right? That being said, for example, with my system that I like to trade, that's the fundamental logic of the signals that I generate. However, you can have trend bars in trading ranges, right? Those are your trap bars. Uh, yeah, if on lower time frames they look like second leg traps, right? On the 1 minute time frame, uh, yeah, this is a trap, right? This is a strong, well, it's an outside bar, so not a great sell signal bar, but it is a strong bear bar and it's buy below, right? It is not a sell to close. Just as this, strong follow through bar from an outside bar is a sell above, right? And because this is a trading range bar, it is not a trend bar. And so then defining the logic that gets you to that is really the exercise in spending time with charts and better just under really drilling down on the context of how the bars appear, like the sequence in which they appear. So this gets to what Carpet's saying, right? Context, ellipses, right? Like of course it's context. Yes, context is the most important thing, but you can only get to context if you can identify where the breakouts are happening because the context is dependent upon where the change occurs. Right? If there's no change, the context is the same as it used to be, right? Until you get the breakout, and then the context is different. But if you can't tell whether you're breaking out, like yesterday, we had that funky slow breakout from the opening wedge, right? I'd say like if you couldn't tell that this bar was breaking out and that change was happening here, you might be buying below this. So the most important thing is to be able to properly identify when the market is breaking out, because if it's breaking out, it's not in a trading range. And so, for example, the way that my code operates, the system operates, is that it's doing that on the level of the bar. It's not looking at it on the level of the the trading time frame of the chart you're looking at, and that's because it's looking at a the lower time frame context by accounting for different kind of input parameters. And so it's looking at the bar in relationship to the previous bar or two, really just the previous bar. Sorry, um, and that's how this logic operates. But yeah, the most important thing is the breakout, and after that is the context that the breakouts create, because the breakout generates change, right? That's a new event. The response to that breakout is either success, right, and continuation, or it's failure. And so if you get a failed breakout and a reversal, then you understand more about the context. But if you get a successful breakout with follow through, then you have different context that you can update. But in either case, it's the breakout that creates that pivot. Um, so yeah, that was a great question. Um, how can I add structure to my trading? Deciding. Yeah, I mean, high two on support, low two at resistance. Those are great. That's different than breakout and follow through, though, because typically breakout and follow through. Uh, um, it depends how you're defining breakout and follow through. Because for me, for example, breakout and follow through is one bar. So that this is breakout, this is follow through. So I would be looking for a pullback of this second bar because this is now a trend bar. This was a trend bar. This is a second bar confirming the trend. And then based on context, I would start looking at 30, 50% and 70% pullbacks, and then managing the position accordingly based on the research I've done about those signals. So, um, oh, carpet, that's a great question. Um, so just to wrap this one up, I would say focus on one thing and be able to trade that without any anxiety, without any concern, and know how to properly manage every expression of that system. So if you're trading breakout and follow through, um, H2 on support, L2 at resistance are perfectly reasonable things to trade. Lots of people do it. But unless you have a very consistent win rate and you're managing all of those, perfectly, not that managing them perfectly doesn't mean not taking losses. It just means managing them according to the calibrated expectations that you understand for the way your system generates signals. Um, if you're not doing that effectively across all of those systems, and those are different systems, then I would say go to one. Just do one. I mean that's what I do with all of the students I work with in SA2. That's what Brad and Ali do. And you know once you've once you've spent the time to really master one of those systems, it all translates to every other system, because the depth of your knowledge about price action from mastering one of those systems translates to everything else you do, because you've spent so much time by definition understanding all of the nuances that arise around the way your signals generate, that you begin to internalize all of the price action that supports every other aspect of your market analysis. So like for example, you know if you don't notice tick gaps right now, if you do a deep study of breakout and follow through, you'll start noticing tick gaps, right? And then you'll see, right, these here. You got, this is now a, if you count the bear bar from which this starts. So see, starting from a bear bar here at the pivot point. So bear bars as pivot points in bull legs are inherently weak, right? So not great signs. We obviously know we're already in a trading range day, so this is going to be a target for pullbacks. But beyond that, um, these two tick gaps are right. They're showing what? This is impatience. This is bulls buying the close so quickly when the bar closes that they are gapping up. And when that happens, yeah, that's urgency, exactly. And when you get two of those into the highs of a trading range that's just had a 70% pullback, right? These are not buy pullback signals. Um, tick gaps can show signs of strength in the right context, and that's why doing a market study or doing a signal study does so much for your understanding of context, because you start looking at all of the places where your signals fail. So, you had breakout and follow through. If you bought this pullback, you actually got a measured move of your signal. So this was your 2-bar signal. Sorry, those are all the input parameters. So you got a 50% measured move of that signal before getting more than a 30% pullback. That basically means that the signal played out immediately. When that happens, you typically do not see, and this is what my research shows. You'd obviously want to validate this yourself based on whatever system you develop. But if you immediately get follow through that reaches measured move targets, whether it's 50% or 100% of your signals, your setup, then and in fact, if you measure it from only this bar, you actually reached the full measured move. So depending on how you measure, if you look at the breakout, so the way this code works is it's not considering this the breakout because it has a weak close. It's deferring to this as the signal bar because this close was weak. So once it breaks out from there, it's generating the signal here. But if you hit those measured move targets before getting meaningful pullbacks, and you're in a trading range, then you're typically seeing second leg traps and climactic behavior rather than uh, the beginnings of a new and stronger breakout. So then when you start seeing sell signals on pullbacks, you can sell above here. I mean, I wasn't trading here, but these are great sell signals after getting this kind of climactic behavior. And so this is to say that tick gaps can be a sign of strength. And sometimes they're a temporary sign of strength, but they're also sometimes a sign of exhaustion. We saw that yesterday. Sorry, not yesterday. It was, what day was that? Was that today? Let me just go back real quick. Sorry. No, it was not today. I was going through charts and it popped up and I thought I would talk about it tonight, but now I don't see it. Here we go. This is a good one that is a sign of strength, right? So you have here the first breakout is the sell, got the big pullback. So this is, I'm sorry, the first attempt to break out here, gap down, pulled way back, and then closed strongly. That's a much better signal than the tick gaps late in a leg. So like if you have 4 trending closes and then a tick gap, it's usually an exhaustive tick gap rather than the start of a new and climactic leg, because if you're seeing tick gaps late in a move, you don't want to see reversals immediately. The expectation is that you're going to get strong immediate follow through, not that you're going to get deep pullbacks. Let's see here. The tick gaps in bear trends can be vicious traps. I'm not seeing any right now. These are always interesting. The tick gaps where you have it gap up, where folks buy the close. So you'll often see this. Here's support, right? In theory, you have support here at so these lines. This is the current day open. This is the Globex high. This is the previous day's high, and then this is the previous day's close and the Globex low. So here is folks buying the close at just above the previous day's high. So it gaps up and then closes strongly lower. So that's another variation of the tick gap. And here's yet another variation of the tick gap. So this is a bull close, and then it gaps down, fails, and then closes lower. So there are a number of variations of tick gaps. Most of the ones that are what people talk about are the breakaway tick gaps, where you're gapping higher on bull closes and gapping lower on bear closes. But obviously, there are 4 different types of tick gaps. So I'm not finding any of those convenient bear tick gaps. Oh, here we go. Jesus, there was one right staring me in the face the whole time, right here. Okay, so we had this one and gap down, and then bad follow through. So if you had, sold here or tried to sell on a pullback, this bad follow through after the tick gap and in a second leg down on a trading range day, these are better fades. Start looking for reasons to buy, and so that's the point at which I would be looking at a lower time frame. So this was where you gap down, and then you had pullback, 2-leg pullback, third leg. So now you have a wedge, and here you had a buy signal below here, which got 2 closes against it. And then here, this is a micro channel into the third leg down. That is a buy signal itself. So one of the systems that I developed early in Systems Academy was a micro gap trading system. So if you turn on there's going to be a lot of them here. Okay. So the gap down here. So this is the blue boxes show strong gaps. So where you have the same direction bar on both sides. So bar 1 and bar 3 are both bear bars. These red ones you'll see is a bull bar and a bear bar. So this was a bull, bear, and then this is bear, bull, bear. So those are red tick gap or red micro gaps. Here, the strong bear micro gap into a third leg. This is actually a fade signal, but you need to take it with a wide stop and be willing to scale in lower. So just for example, that's the minimum stop. And because that stop is right at the previous day's low, I would put it even lower down here. So again, these are all the kinds of calibrated expectations you would want to understand if you were going to trade any of these systems. But yeah, that's how I would manage this if I were looking at it on a higher time frame, and I knew that this tick gap is probably a sign of pending exhaustion. It's also part of a weak micro gap setup. So understanding that this is a wedge on a lower time frame, yeah, this is a buy opportunity in this third leg down here, and you can see that that bear micro gap ended up creating this bull reversal. But again, having the context and the systems ready to deploy is really part of the important part of that process. So go back up here to Carpet's question. Tomorrow's the last day of the month. I do not change the rules. I will usually trade smaller size depending. Well, I mean, I rarely trade the first 6 bars. And then after that, if there is much higher volatility, then I will change my position size. But outside of that, the rules are all the same. None of that changes. The signals are all generated by the same price action first principles that would be in play any other day. I do usually stop trading by noon at the latest on Fridays, though. So that's just a general Friday thing for me. I really prefer trading in the morning anyway. I feel best in the morning and can more patiently managed positions, then uh, yeah, that's just what works best for me. Here we are. Do you determine entering trading range behavior based on a certain pullback percentage of a prior trend bar, or do you look at the pullback for the entire leg? Uh, it depends what the how you're determining the trend or trading range. So I'm looking at it based on the bar. So for me, the bar is giving me the trend or trading range signal. So is the bar in relationship to the previous bar? It's not the larger context, which is why there is a little bit of the larger context that the algorithm accounts for, but it's not enough to take the signals blindly. So there is enough that I have to do in my reading of context that I do account for that. So, like I said, certain times the signals are fades versus trade for continuation. Like here, this is a breakout of a bad signal bar, and then here, this is a breakaway gap, and so that's if you and something to always keep in mind is I like trading with limit orders because it forces me to be patient. So if I miss this trade, so knowing that this is probably not going to be uh, a strong breakout and retest of anything at this point because there's no great retest levels up here. We've retested all the places where bulls got trapped before. This was a relatively good signal bar, so there's no one trapped up here anymore. Anyone who was trying to buy below here probably got out on 56. This was a strong enough close that it's unlikely folks are holding and trying to buy and scale in lower to get out here. And then here, this pullback and second leg down and wedge bottom anticipation is for retesting the second leg high. Right. So we got that test and it was successful and we entered into a trading range, which is often the case, moving into the end of day. Now, that being said, if you didn't see that and you didn't take the sell above the second leg high signal bar, which hadn't been tested yet, then this generates secondary trades. So there's always, like, one of my favorite things that Ali says is there's always a better later trade. So if you didn't take that trade then, you can resell it the next time, or you can sell it the next time rather. And when you get again this 4 bar, 5 bar micro channel with, and whether you count the inside bar or not, if you want to count this as the first bar of it, this is technically the first bar of it, 69, but 70, 71, 72, and then 73 inside bar as the end of the channel, no breakout, right? That's not a sign of strength. So if you wanted to sell here, because this is now the second entry for this failed breakout, then this is a great second time to enter. So one good practice that I like to do is just mark those. When signal bars fail, just mark them on your chart. Like here, this is high probability of getting retested. These had a high probability of getting retested. This was a sufficiently strong breakout and after another failed retest of the high, that, in my opinion, we weren't going to necessarily get the retest of these levels. And this was a breakout of this weak level, so good odds to retest that. So just a good practice to mark those as the day progresses. So I don't know if that helps, if that answers your question. Uh, no, I don't trade trends. I don't like holding a. One of the things that I realized after trying to be a swing trader for a long time is that it's not for me. I just don't like holding positions for long periods of time. It just doesn't make me feel good. And that is a deficiency in myself that I recognize. But I trade accordingly. And so I usually like to be out in 3 bars at most. My research based on Ali's suggestion and research that he's done, is that it is uncommon to get more than 3 bars in a uh, 3 unbroken trend bars. So if you have 3 strong closes, the odds of getting a pullback within a bar or two are significantly higher than continuing and starting a newer, stronger trend, which is why 3 bars is usually the outside of the holding period for me. That being said, I'm still trying to get better at holding during small pullback trends, because my biggest problem with trading small pullback trends is that they take so long to reach targets that um, I end up having to hold positions for 5, 6 bars, and I'm still not used to doing that. Like it's thankfully we don't get small pullback trends frequently enough that I have to confront that deficiency on a regular basis. But whenever we do see one, I recognize that I'm probably going to leave a lot of profit on the table because I'm not going to optimally exit most of those positions. Let me see here. Yeah, third legs. So the one good kind of first principle of trading for trend resumption is that once you have 3 legs, I mean, this is something that Al talks about in all the time in every book, and the video course. Brad talks about it. Ali talks about it. The odds of getting a breakout in the direction of a wedge are 25%, and when you get them, as we did here on the open, the odds of getting a second leg are very high because you're getting a breakout in the direction of the trend. Um, this ended up being a very weak, kind of tepid second leg, but it did get the minimum expectation of retesting those highs. I typically don't use the absolute high. I usually look at the close of uh, the last bar in the direction that I'm trading for trend resumption. And that's because it is the place where anyone who bought the close is going to be trapped. So the higher probability of getting out here than if you try to get out at the absolute highs, which is not always going to happen. So uh, just my preference. And so we see here that actually after these, 2 strong climactic bars, we still had bulls buying the close. It gapped up and immediately reversed. So another good reason to be out at this high versus holding for the absolute highs. Um, so this is kind of how I approach the day in general, is looking at every bar. And obviously, I trade bar by bar. So always assessing whether or not it's a trend or a trading range bar, and whether it's in a first, second, or third leg of whatever phase of the market cycle we're in, and then from there, determine the next best right action. And the thing that I benefit from a lot is actually, and I know Carpet. I believe you used to do this. I don't know if you still do. Market replay, Ninja Trader Market Replay is so great because you can go in, and if you do focused study and say, I'm only going to trade breakout and follow throughs, and I'm only going to enter on pullbacks of 30% or more. If you run it at 4x speed and just put the fib retracements on anytime you get a breakout and follow through, and just start entering on every one of them, all of the various nuances surrounding those signals will start to become dude, come on, as we speak, you wait a minute. So no, I'm not that self-important. Don't worry. The 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 thing that we get from and this is what someone in SA2 shared last week, the process of studying the market nuances around your signals will tell you so much more than just, kind of having a rudimentary idea of a, high to it support, low to it resistance, right? Those are kind of general ideas, but really becoming like Ali talks about in his article, becoming a pro and being able to account for all of the trade management requirements that each of the nuances around a signal require. That's the thing that you can internalize and embed into muscle memory through replay. um, I think it's incredibly useful. Some folks don't like it. And Carpet's a ninja. He has some serious, ninja script skills. No pun intended. You are a ninja and also happen to code a ninja script. But I was defeated by ninja script, so I went to Pine, and now I'm working in easy language for other reasons. But uh, whether you're going to code or not, even just throwing on market replay and spending time there and just running through days. It's price action, so you can also get different markets. You'll never run out of things to test. So um, those calibrated expectations, and I'll just throw this up one. There was a really good question before, and uh, where is it? Don, we can talk about the reversal and follow through strategy next time. 'Cause I gotta drop here in a minute. But there was a good question about hmm, where did it go? Sorry. Um, mhm. I thought I saw a question about how you determine when to get out. Maybe I'm hallucinating. That would be strange. Well, in any case, all of my trade management, how long I hold for, has actually been determined by doing the signal study and then validating it in market replay. So much so that if I'm trading a fade signal, so if fading here, if I had sold here, um, and I got two closes against me, I wouldn't even think about it. I would immediately close the trade. Um, I shouldn't say that. Based on the context of the signal, I would immediately close the trade. If I had done that right here, I probably would not, because the odds of getting a 50% measured move of this were actually pretty good. The fact that it didn't get there is pretty good reason to take the second signal. But all of that comes from studying the signals and then executing them in replay over a long period of time, so much so that you don't really have to think about the management principles. And then also, second thing, writing them all up. So once you write up your calibrated expectations, your all of your trade management. So for this signal, what are the general tendencies? What are the exceptions? How do you manage both of them? What are the four categories uh, of response to this event? The uh, is it the basically four categories of response? Is it the expected result with uh, normal volatility? Is it the a surprise result in your favor? Is it a normal failure of the signal or a surprise failure of the signal? Right. So those are basically your four categories of response to the event. And if that's the case, if any of those four happen, you should know exactly what you would do in all of them. Which is why once you can account for those four different you know uh, results of the event, nothing can really upset you because you know what to do no matter what happens, because you know how those signals behave. Um, Uh, Track everything in Excel. Everything goes into Excel, and then once you have enough data and you really want to go bananas on it, you put it in pandas, and then you start building out data frames there and making charts, doing all kinds of wild things. But most things can be done in Excel. Actually, for most people, I would not recommend doing anything other than Excel. Just throw it in Google Sheets and just track all of your work there. Um, Great. Well, then I think we'll wrap it up there for this evening. I'll stop sharing. I appreciate everyone jumping on and spending some time to chat, and we'll pick it up on Sunday probably. Try to do another. Um, Thinking about whether it would be useful to talk about coding for price action and kind of the first principles of that, but it might be more worthwhile to just stick with system design for now. So, all right, cool. Well, everyone, have a great evening, and we'll catch up later. As Carpet reminded us, it is the end of the month, so just keep that in mind as we go into tomorrow and trade well. Talk to y'all soon.